Good morning, everyone, and thank you very much for joining us on this grey Wednesday morning. I'm Lucy Day. I'm Business Development Manager within the Digital Procurement Services team at Compleat Software. That is a little bit of a mouthful, so I'm just going to refer to us as the DPS team going forward. And I'm here this morning to talk to you about how digital procurement software, in particular, how spend analytics and carbon tracking reporting is helping our customers drive cost savings and achieve sustainability and ESG goals within their organisation. Joining me a bit later on this morning will be Ian Creswell, who is the head of our UK direct sales team. We do have a fair bit to get through this morning, but over the next 40 minutes, I'm just going to briefly outline what digital procurement means to us at Compleat Software and how that's aligned to our proposition. I'm then going to give you an overview of our spend analytics solution before introducing the carbon tracking tool, which, as you can appreciate, is fairly comprehensive in what it covers. So I'll just be quickly showing you a couple of the reports and how this can help reduce your carbon footprint in your supply chain. We'll hopefully have a few minutes at the end for questions. If you can type those into the chat box within the Zoom screen, we'll do our best to get to those. Any I don't manage to get through, I will come back to you directly on. And in addition to that, we will be sending this recording out to all of those that registered and attended today. So don't feel the need to sit there and scribble down notes, because we will be sending this recording to you shortly after the event. So I want to start by clarifying what digital procurement means to us at Compleat Software. And I'm conscious that we have both customers and prospects on the session with us today. So just a bit of background. Compleat Software are a software author based in the UK. We have offices in Doncaster, Norwich and London. We also now have offices in the US and Australia. We were founded in 2008, and when we came to market, primarily we were focused on purchase to pay and accounts payable solutions. But since then, we've grown significantly. We now have over 80 employees within the organisation, and we position ourselves as a mid-market digital procurement specialists. And we provide a range of solutions across a number of areas, which we'll shortly come on to. We have approximately 450 customers. Some of those include some fairly well-known household names such as London Zoo, Zoopla, ClearScore, the Royal School of Engineering. And we also have an extensive partner network, all of which are using us to digitise and automate their procurement processes. So digital procurement really, as far as we're concerned, is the answer to driving rapid change and adoption of automated procurement processes that don't just allow your organisation to operate more efficiently internally, but they are the foundations necessary in order to drive cost savings within your supply chain, as well as understand where the highest areas of carbon are being created throughout your organisation. So ultimately, you can implement the solutions that physically reduce these. And what I'm talking about today is something that many thousands of UK SME organisations understand, but the reality is they understand the need, but they lack the knowledge, potentially the internal skills and the resources to know where to be able to start. And hopefully what we're going to cover in the next couple of slides will help some of those who might not necessarily have started a digital procurement journey clarify some of that for you. So digital procurement, therefore, is something that is achieved once you have all the staff within your organisation purchasing everything that's required to run that business, from sourcing the right suppliers and the prices, right through to contracting, reviewing, integrated ordering, and even blocking and removing, and of course, invoicing and payment via online software or platform or solution. And if you've ever had sort of any experience of this sort of area previously, you may have heard the terms best of breed or best in class or suite provider. What that basically refers to is the differences between various software houses and whether they provide a solution for one specific business area. So I might just be a business intelligence specialist, or I might just offer an e-sourcing solution, or in our case, a full procurement software suite covering everything from source to contract or sourcing to payment. Both approaches have positives and negatives, and ultimately, you know, the path you choose to take often depends on the size, the scale, the complexity of the requirements, and of course, the budget that you might have in place to implement some of these areas. But for the purposes of today, the key element that we need in place to allow you to use our spend analytics and carbon tracking tools is the accounts payable automation, where we can digitally capture and extract line, level, and invoice data. So what that basically means is you're taking away manually keying in your purchase invoices and you're digitizing them. And there's lots and lots of benefits around doing that anyway. And that's when I'm going to hand over to my colleague Ian shortly to further explain what those are. So in Compleat's world, we see four key areas necessary in driving an overall digital procurement strategy across a business. And to better explain the first two areas that you can see on your screen right now, which are required in order to use our spend analytics and carbon tracking tools, I will hand over to my colleague Ian, as I mentioned before, who is the head of UK direct sales at Compleat Software. So Ian, over to you.
Thank you very much, Lucy. So yeah, just obviously in brief here, given the focus of today's webinar, which is around our ASA and carbon reporting, but just to touch on, I suppose, the front end of our offering, which we have a couple of different purchase to pay and accounts payable automation solutions that enable us to kind of drive and focus in on points 3 and 4 on the screen here, which Lucy's going to take us through later on today. So really, in terms of what we offer, in terms of points 1 and how these kind of interlink, essentially at the front end, Compleat is an extension of the underlying ERP or accounting software to enhance and automate the purchase to pay or accounts payable processes. So starting with point 1, enabling accounts payable and purchase automation with the built-in features and tools of our applications, such as kind of integrated purchase requisitions, online buying features through supplier websites with the likes of Amazon Business as an example, which really allows the end users to go into the Amazon Business website, raise orders, populate baskets, and then take the contents of those baskets back into our applications and then dynamically route them on our approval workflows. And then finally, the invoice matching aspects, which all interlink and integrate with the underlying ERP or accounting software. So point number 2 on screen is the background piece of technology called Compleat Capture, which is essentially the essential service at the core of our offering. So it extracts the purchase invoice data from the documents that we receive on behalf of our clients, but driven by our own artificial intelligence and machine learning software to convert the digital invoice documents into digital data, which we can then provide into your application. So it's delivered down into one of our front-end applications for further processing. But then that digital invoice data really starts to drive points 3 and 4 on the Compleat Cycle that you can see on screen here. So those areas are kind of where Lucy and her team become involved. So without kind of touching on that in too much more detail, I'll hand back over to Lucy to kind of take you through those different aspects and what's involved with those.
Thanks ever so much, Ian, for that. So really just to introduce advanced spend analytics and carbon tracking in terms of what they are. They are business intelligence tools that once we obviously have that supplier data that's coming directly from the purchase invoice, allow us to be able to provide reports that interrogate pricing and give us product access around what's being purchased, at what cost, and ultimately the carbon and resources efficiencies that can be driven. And once that carbon tracking element has been added, this becomes a mechanism for you to be able to drive down the carbon emissions and reduce scope 3 in supply chain, which is something I will come on to explain what that is essentially. We then return to step 1 to repeat that overall process, each time getting better, more informed with more data and understanding of how to drive the best outcomes from this process. If you would like a demonstration of any of our P2P tools that sit within the 2 areas that Ian just covered, then please reach out to him directly and he will be happy to get something in the diary with you. As I've said, we will be following up this session afterwards and he will make contact with you if that's something that you would like to do. So I'm going to come on to now the demonstration of the spend analytics part of our reporting tool, and I just wanted to spend a bit of time just really quantifying just how significant this solution is. Just before I joined Compleat Software a year ago, I spent the last 17 years working with various size customers in size and complexity and range of sectors, essentially supporting them through the implementation of various back office solutions across financial management, procurement, cash flow management, business intelligence. And one thing that really bore out, certainly in my last 5 years within that industry, is that we process huge amounts of data. But the challenge for many businesses is that often it sits in silos. It might be sat in different databases, different systems across different locations. And the problem is, how do you bring all of that really important data on which ultimately we want to base our business decisions on in an easy and accessible way? A lot of the business intelligence projects that I worked on with various clients ran into months worth of implementation and tens of thousands of pounds of cost. But it's this data and the ability to look back that ultimately allows us to make accurate and well-informed business decisions going forward. So having that data for many businesses now isn't really deemed as a nice to have, it's deemed as a necessity, even more so given the current challenges that there are within the supply chain that we're all facing globally. So when we brought the ASA and carbon tools to market, we wanted a reporting tool that is quick and easy to use, functional, but with a low cost of maintenance. And that's what I will be showing you, as I said, including a brief introduction of our carbon tracking tool, which sits alongside spend analytics. You don't have to have spend analytics in order to have carbon. They are licensed separately, so that one is not dependent on the other. But let me just change my screen now and I'll jump into the software. Just refresh this and check I am still logged in. So as we mentioned before, Everything that you're going to see in this tool is data that we have captured directly from the purchase invoice that we are digitally taking into the Compleat P2P system. So you can either have that functionality in isolation, or if you're using the purchase to pay element of our software, it's obviously the data that we take in to match to the purchase order that was raised within the system. We capture both header and line information, and we update this reporting tool at the end of every day. So it's Wednesday today, I'm looking at yesterday's information. The data that you're seeing on screen is real customer information that's been anonymized. And when you first log into this, which is an extension to the core system, it's a reporting option that you subscribe to. When you first log in, it's essentially giving you a summary of everything that we have captured for you. And the moment that you start processing your invoices through our system is the moment that we start capturing that data. So it starts building that picture of what's going on within your supply chain from day one. In this particular example, you can see here that I've got 37 locations. So we do report on either entity level or location level. You can see here the total amount of spend, the number of documents and suppliers. It also will show me at a very high level what my spend over time has been from a yearly point of view, and the potential savings on the bottom right hand side there. That is data that is provided to us through our procurement network. We work with a number of procurement specialists, and these are savings that they have identified and shared with us. So they are not an exact number. It's more of an indication to show you where you might want to go and have a look within your own data, and where there might be some potential savings that you can find. Last but not least, moving on to the left-hand side here, we have the spend by procurement category. So what we do within the system is any invoice that comes in from a supplier that we haven't seen before. We have around 200,000 suppliers within the data lake. We process around 1 million invoices a year. We will look at the SIC code for that supplier, and we will allocate them into a procurement category. Now, the caveat here is that that is not a set in stone categorization, and many customers that we've worked with already have come to us and said, yes, you've put Amazon into stationery, office supplies. We don't actually buy our stationery from them, we buy this, and we've reallocated them into a new category. So there is flexibility around that. And obviously there is also the consideration that some of our customers don't necessarily view that data in that way. When we wrote this originally, it was specifically for a client that had a procurement specialist within their own organization. And over time, we've realized that not everybody has that sort of resource within their organization. So just jumping from here, the first thing that I wanted to show to you is that we have an alternative view to look at this from a nominal perspective. So this is a report now that's going to show me everything that has been allocated into my nominal structure. So this would only be applicable for anyone that is raising orders, purchase orders within the solution, because when obviously you raise a purchase order, you would allocate it to a nominal, which we cache from the finance system. Now, you can see here on screen the reason why we didn't originally write it in this way, because a nominal structure tends to be extremely detailed. And that's often because when you put a finance system in originally, it's a very nice, concise chart of accounts, but over time, people create nominal codes because they haven't necessarily known where to code something, and it can get quite untidy. So the first thing that I might use this report for is to check for anomalies like that. And if I flip this data around on screen here, I'm probably fairly happy that these sorts of things have been coded correctly, but there's definitely some examples here of codes that have been created, more than likely because they haven't known where to put the invoice. It's one invoice for one supplier for a really low value. So that allows finance to check and see how the coding is working, and ultimately go back and do some housekeeping, whether that's in our system and restrict what nominals people can ultimately code back to, or actually go back to the source system, the finance system, and tidy the coding up through there. If, however, I'm using it more from a procurement perspective, and I want to actually start having a look at what's sitting within my categories where there's the highest amount of spend, suppliers and documents, I would simply flip that to look in the line net total, and it's now showing me those categories. And what I can do from here, because I have a little down arrow, is start drilling into some of these so that I can actually see what makes up that particular nominal code. So I can start seeing the suppliers that sit behind all of that. And then from there, I can go into the supplier analysis area and start looking up some of these suppliers to get further information on what makes up that value on screen. But before I go there, I'm just going to jump into site analysis, because that's a really, really powerful part of this report. Certainly from my experience of having worked with some fairly sizable organisations in my time, being able to centrally manage what's going on and know what's happening across each of my entities or each of my locations is really, really challenging. Often what you end up happening is each location or entity has its own set of reports. They're not necessarily centrally accessible, and you end up really with people kind of owning their own data and not really having a particularly clear picture of what's going across, what's happening across the whole landscape. So this is anonymized data. In your world, it would be the business unit name or the entity name or the location name. But essentially what I can now see is everything that is happening across each of those sites from a spend perspective, from a number of suppliers perspective. And if I use the filter option here and I think about where I might want to go, I would maybe want to have a look at last year. I might want to pick office solutions. That tends to be a fairly common category. Most entities and locations would be buying stationery in some form. And if I click on apply, what that's going to do is now rationalize this data and now show me across all of my locations what each site has been doing last year. Now, from a spend point of view, there could be some justifiable reasons why there's quite a significant discrepancy. It could be that this particular location has 5 people in it, this particular location has 500. But where you have a procurement policy in place, or certainly where you have maybe 3 or 4 or 5 nominated suppliers that you buy stationery from, this report on the right-hand side here is showing me there's quite a big discrepancy in the number of suppliers that are being used to provide stationery. You've got sites down here that are buying from 4 or 5, which feels about right, versus the sites up here that, in all honesty, are buying all over the place, and would suggest to me that the people in that location don't necessarily know who they should be buying from. Now, what I can do here again, because I've got that drill down option, is simply click on that. And that's now going to take me to the detail behind that site and show me everything for last year that this particular location has spent within the office supplies category. And again, thinking about how I would want to interrogate this if I was, in a procurement world, I'd want to have a look at some of the lower value orders and actually see how many times we'd ordered potentially, so I could flip it to show the number of documents. So again, looking at this one, it was for a really high value. The data that's being used for this was a school, a multi-academy trust. So seeing one order for furniture doesn't surprise me, because I know that schools generally refurnish their classrooms once a year during school holidays. But there are some orders here that do concern me that are for really low value, and that we've only ever ordered from that particular supplier once in the year. That would suggest to me that either the end user who raised that order tried to get something cheaper. Often people do think that they can get things cheaper using their own intel. It might well be they didn't know that there is a particular arrangement in with a supplier to buy a certain item. But the point being here is that you're able to check on these sorts of anomalies really quickly and take action, so that if you do have any central buying agreements for some of your biggest areas of spend, you can make sure that every single site is complying with that, because ultimately those pricing negotiations that you've built into those agreements are where you're going to save money. And if people aren't using those, that ultimately is going to drive up the cost for potentially some of those things. So I'm now going to quickly jump into the supplier area. So this is an area of the report where you can start to do side-by-side supplier comparison. And again, when you jump into this report, it's showing me everything. It's showing me across my entire organization, my top suppliers from a spend point of view, and my top suppliers from an invoicing perspective. If I want to actually start getting into some of the detail behind this, again, I can use the little filter option here. I can remove some of the previous document years, or I can do side-by-side yearly comparison if I want to. I can pick a particular category that I'm interested in. So if I just pick office supplies, so it seems to be a fairly common one, and click into this and click on apply. What I can now see is across my organization, every single supplier that we're using within that category. And there's some interesting things here just initially to look at. So YPO, I'm spending more than double with than Amazon, but yet Amazon, from an invoicing perspective, are actually causing me more of an administrative burden because they're sending me significantly more invoices than YPO are. Now, that might be because YPO have a consolidated invoicing function, so they're wrapping up their invoices and sending fewer to you. So that would suggest to me, should we be using Amazon? Because yes, that we might be getting some more favorable costs, but how much time is it costing our business to process their invoices? And again, if I want to go in and have a look at the specifics of what I'm buying with that supplier, I use the little drill down option here because I've got that down arrow. I click in, and what I can now see is all of the detail that sits behind YPO for last year in terms of what I've spent with them. So interestingly, that's not just the line document reference, which relates to the purchase invoice, which obviously you can refer back to if you want to go and see the physical invoice. It's the line item description as well as the base cost and the quantity. And as I say, what you can also do in here is start doing side-by-side supplier comparison. So if there are things that you are buying from various suppliers that are similar, you can start to see which suppliers are charging you a better price, which will allow you to obviously go out and renegotiate those contracts when it becomes appropriate to do so. So that's where I'm going to leave the spend analytics for today. And I just come back to my presentation, and I'm now going to jump into carbon. So I just want to talk firstly about what ESG actually means. Some of you may have heard the term already, but it's essentially environmental, social, and governance reporting. It's everything really that covers all elements within a business that can have a positive or negative impact on its employees, customers, and the world around it. And when we look at the areas of ESG and essentially what it covers, I wonder how many of you think, what areas procurement have a key part to play in. I'll let you ponder on that. But it is a trick question because actually it's all of them. And what we wanted to do with our carbon tracking tool is create something that helps our customers drive down their own carbon emissions, because ultimately we want to create a huge, valuable and positive social and environmental impact. And when we think about the scopes that are involved within the SECR, just to explain what those are and what SECR reporting actually is. In the UK, it's a mandatory government reporting requirement eligible for companies and came into effect in 2019. It doesn't affect everybody. There are some criteria that you need to meet in order to be required to file this, but it's all large companies that either have a turnover of 36 million or more, a balance sheet of 18 million or more, or 250 employees or more. So if you meet two of those criteria, then ultimately you are required to file those SECR reports. And they include the declaration of greenhouse gas emissions, and that's due to your energy use across the 3 scopes listed here. It's a relevant ratio of emissions against a factor associated with the company's activities, and that's called an intensity ratio, which you will hear me refer to in the demonstration shortly. It's comparative figures and also the energy efficiency action that you've taken in that reporting period, as well as a statement of the methodologies of the calculations used. The guidance states that any organisation that has to comply with this has to use verifiable data where reasonably practical. So what that means is it's either metadata, it's data coming from the invoices from suppliers, or annual statements. And quite a few organisations that we've spoken to already have a pretty good handle on scope 1, because obviously it's data that is under their control. They're starting to get into scope 2. Scope 3, however, is the challenge, because it's emissions that come from all other indirect emissions. So it's activities occurring from sources you don't own or control. And the reality is these are actually where the greatest share of carbon footprint come from. And it can be as much as 70 to 90% of carbon emissions being produced in scope 3, which basically means for all the hard work a lot of our clients are doing in reducing their own emissions, the biggest volume is actually still being created by the supply chain. And that means that the data that procurement hold, combined with the relationships they have with key suppliers, becomes key to providing the SECR reporting. So I'm going to be focusing on the scope 3 element of it, because that's really what our tool is there to allow you to report on. So it's really important for you to get into that, to have the expenditure data down to the supplier and ideally the product level, in order to work with the various carbon calculations based on each supplier. And as I say, that's where Compleat comes in, because without access to that granular data, it's nigh on impossible to be able to accurately report on scope 3. There are consequences of late filing. Obviously, if you don't have the SECR component included within your accounts, it can mean those get filed late to Companies House and they don't get signed off. And there could also be potential further penalties that get imposed by the government going forward, whom, as you know, have already set some very aggressive targets for us to meet in the UK. And I mentioned before about intensity ratio. This isn't going to be a maths lesson, but I do want to quickly explain what it is, because it is important. But a carbon intensity ratio is basically a metric that's used to quantify total emissions, and it's the most widely used benchmark to measure performance overall year on year. And it's absolutely critical for you to understand it, particularly if you are going to put a climate pledge goal in the public domain, like we're going to be net zero by 2030. And in terms of how it is calculated, it's grams of carbon dioxide equivalent, CO2e, per pound dollar of gross merchandise sales, effectively. And if you want to know what yours is, unfortunately, that's where it does get a little bit tricky or costly or both, because there are a series of recognised methodologies for calculating it. And it's down to the organisation to measure and monitor this. And in order to calculate this figure, you'll need to know the carbon emissions across all 3 scopes. So not just scope 1 and 2, scope 3 as well, third-party supply chain emissions. And as I've mentioned before, it's in that scope that anything up to 90% of your CO2 footprint can be found. In terms of what our score is, we produce, for every pound we spend to run Compleat, we produce 0.26 kilograms of CO2. So I'm going to quickly jump into the software now, just to show you a couple of the reports. So the first thing to mention is that the sustainability part of this reporting is licensed separately, or you can have it running alongside the spend area if you wanted to take both. And very similarly with the reporting that we created for ASA, the first thing that you can access in the reporting tool is a summary of all of your spend information that's had the necessary carbon intensity ratios applied at a category level, at a supplier level, and an overall company level. So in this particular example, I can see how many documents, how much spend, but then I can see what that represents in terms of my own carbon intensity ratio. In this case, it's 0.4. But interestingly, on the top right-hand side here, I can see what that represents in percentage in each scope. So in this example, this particular client has 82% of their spend sat within their supply chain. What I can then do from here is start looking at some key areas of information around tracking my CO2. So if I come into the CO2 tracking area, what I'm able to see here is what my cost and my footprint is over a period of time. And again, all of these reports show a summary level of information, but if I want to particularly filter that down to be more specific and have a look at last year, for example, I use the little filter option here and I click on apply, and that's now going to reduce that down to have a look at last year. And interestingly, although my spend value in this particular month of August was lower than in June, my carbon footprint was much higher. So I might want to drill into that and actually go and see what that was actually made up of, which particular categories were making up that footprint, and furthermore, in that particular category, what suppliers made up that category. So you can start to see where there have been spikes that don't necessarily correlate. There is an assumption that the report, if you're spending more with the supplier, the ratio will be higher. That's not how this works, because ultimately the suppliers themselves will all be taking their own actions to reduce their own footprint. And in fact, we did an exercise with a client who wanted to review their top 2 stationery suppliers, and that was Amazon and Office Depot. They assumed Amazon was going to be the higher from an intensity ratio perspective. It wasn't. It was Office Depot, but that's because with Amazon they were consolidating their deliveries. Obviously, Amazon also are investing hugely in making their organisation more sustainable through looking at electric vehicles, through the recycling that they do, and the types of packaging that they use. So where you're using a supplier that's really investing in their own sustainability goals, what you should see through the monthly update that comes through on this with the intensity ratios is that intensity ratio with that supplier reduced, even if your spending with them is going up. And that's really the whole point behind this, is that ultimately you want to be working with suppliers that are really kind of putting their money where their mouth is in becoming more sustainable. The last area that I'm going to touch on, because I am conscious of time, is just jumping into the suppliers here. So if I wanted to go and have a look at some of the reports around the supplier details, I can come into here a bit similar to how I did within ASA, and I can start having a look at these suppliers specifically in terms of which have the biggest footprint. And interestingly, this gives you some more information. So it looks at things like carbon delivery. So I might want to be looking at this and think, well, you know, the suppliers that I'm using, which ones are delivering to us more often? Because ultimately, the more deliveries that you receive from a supplier, the higher the footprint is going to be. And ultimately, that might be one thing that you want to come in here and have a look at. That's pretty much all we've got time for to cover on this. As you will have seen from the menu option, it is extensive. If you want to have a bit more of a detailed look on this in particular, then obviously we can arrange a one-to-one demonstration and take you through all of the other areas of the report. So we do have a couple of minutes for questions. I have seen one that has come into the chat box here. So this is a question about whether or not we capture employee expense information. So if you are looking at processing expenses, we do have an external module for that. So what I'll do is I will contact you with that information. But ultimately, it's an external application that links into our system that allows you to manage the tracking and capturing of expenses alongside our P2P software. But we'll send you some more details on that. Thank you very much for that question. If any of you have any other questions, please feel free to type them into the chat box or the Q&A box, and I'll do my best to answer those in the time that we've got left. So we've just had one more question come through. Is the software real time? So the application itself, all of our software is cloud-based, so it's accessible 24/7. The data we capture, you know, anyone that sends an invoice into our portal, we capture it. It gets updated into the data lake of, at the end of every day. Obviously, we could do it more frequently than that, but that would probably cause the system to keel over with the amount of invoices that we process. So as I mentioned before, it's looking at 24 hours previously. So if I'm logged into the system today, I'm looking at all of the invoices that the system processed yesterday. So we've had a question come through. If a company buys 50 laptops from a supplier, how do you calculate the emissions for that invoice? So we use an external organization to provide us with the carbon intensity ratios for each supplier. Each supplier has its own ratio. And essentially what we do is we send the third party the details from the supplier invoices in terms of the totality of what you've spent with that supplier. We times it by the ratio, and that's ultimately how you get to the calculation for the carbon in metric tonnage in CO2. So I hope that answers that question. I'm conscious that we have run over by a minute here, so I'm going to end the recording now. As I mentioned at the beginning, we are going to send the recording out to everyone that attended today, and also we will be reaching out to you via telephone over the next couple of days, more so really just to get your feedback and make sure that you got the follow-up okay, and obviously answer any additional questions that you may have. Thank you all so much for attending, and we wish you all a good rest of the day. Thanks ever so much.
The future is now.